You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Monday, 3rd day of October, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first live broadcast is from 9:30 a.m. to 11:30 a.m. Eastern every trading day. That is our live training room. That's where all of our passport holders receive 2 hours of live interactive training and live markets every trading day. The live training room, of course, is reserved for members only and those who are taking the 1-week free trial. The second live broadcast begins at 12 noon Eastern, and the afternoon broadcast is open to the public. Everybody, everywhere. Now there's 2 ways you to join the afternoon broadcast. One, a little better than the other. The best way, go to mytradingiq.com. Scroll down to where it says afternoon broadcast. Click the link, complete the 30-second registration form, and then every day going forward, every trading day, you'll get an email before the afternoon broadcast starts. All you have to do is click the link in the email and it will automatically log you in to the go-to platform. And the reason that's a little better way is because it gives you access to the question box so that you can ask questions and participate in the discussion. On the days that you're out of the office, away from your desktop, and you still want to join the afternoon broadcast live, all you need is an internet-connected device, a phone, a tablet, a PC, a Mac. As long as it's connected to the internet, point the browser to our YouTube channel, youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we also archive every afternoon broadcast. Currently, there are over 2,000 daily live broadcasts archived for your educational and viewing pleasure. If you're new to the world of CFRN, one of the best things you can do is go to the YouTube channel, not just to watch the live broadcast today, but you can go back 6 weeks, 6 months, a year, 2 years, and get a real idea of who we are and how everything that we do is still based on the underlying principle of how markets work. No matter what market, stock, crypto, or forex pair, no matter what time frame, 1 minute or monthly, price flows from support to resistance, back to support, back to resistance, over and over, again and again. It is a never-ending cycle. Once you understand that, and you learn how to read the chart and use multiple time frames, the 30-minute chart is what all alerts are based on. It's a roadmap. It shows you which way the wind's blowing. What you learn in the live training room every single day is how you execute. In other words, Michael and Valerie teach how to fish. The alerts show you where the fish are. You ever been fishing and you're on one side of the lake and some guy's on the other side of the lake, and you got to have a bite all day. And he just keeps reeling them in, because he's where the fish are. The alerts show you where the opportunity is. And once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. Now, today's going to be fast and furious because my AC guy still hasn't showed up yet. He's on his way. Last night I didn't think, because of the heat, I'd be able to get out the Logic 247 alerts and the CTAs. I did promise I'd get out the weekly trading zones, but by the grace of God and a big fan, I managed to do them all. So with that said, let's open with a word of prayer. Time and treasure. One of those is a renewable resource. The other isn't. When you lose money, you can always make some more. But when you lose time, it's gone. As with everything in our lives, our ability to live in the fullness that God has for us has everything to do with our focus. Philippians 4:12. This is Paul writing to the church at Philippi. I know how to be brought low, and I know how to abound. In any and every circumstance, I have learned the secret of facing plenty and hunger, abundance and need. But I can do all things through him who strengthens me. As with everything in our lives, our ability to live in the fullness that God has for us has all to do with our focus. The world tells us that we must concentrate on things, money, success, and on protecting all that we are able to attain, no matter the cost. The world tells us the insidious lie that who we are and what we have is never enough. In Deuteronomy 6:5, we discover what God, or where God, tells us to put our focus. It says, you shall love the Lord your God with all your heart and with all your soul and with all your might. In its counterculture way, this command seems to totally ignore our earthly needs. The tug to manage our lives, our time, and our money is strong. After all, if we don't, who will? We are called to be good stewards of all that we are given. That stewardship is lived out in recognizing God as the source of all good gifts. Taking those gifts, whether meager or much, giving thanks, and then offering those gifts in response to his prompting in our hearts. When a married couple can come to a place of letting the Lord manage their lives rather than letting their lives manage them, there comes a deep and accurate sense of having enough. In need or in plenty, rushed or relaxed, hungry or well-fed, through him and in him, we find that godliness with contentment is great gain. 1 Timothy 6:6. Pray with me. Heavenly Father, the world is so loud as it clamors for our hearts. It is the noise of confusion that lures us out of living in you as we frantically attempt to manage each moment. God, we pray today that you give us the grace to focus on your glory and to know how to be content no matter what. In Jesus' name we pray. Amen. And the AC guy just rolled up out front. Michael, are you there? All right, let me give you the numbers from around the world real quick. Start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow's up 650 points, 2.25%. NASDAQ up 167, 1.5%. S&P 500 up 74, which is a little over 2%. And the Russell 2000 up 34 points, which again is a little over 2%. In the commodity basket, crude oil up $3.36. That's a gain of over 4%. Gold up $27.20, trading 16.9890 last. That's a gain of over 1.5%. Silver's up $1.50, which is $7,500 per futures contract traded. Silver is up almost 8% on the day, trading 20.54 last. In the Asian markets at the close, the Nikkei gained 278 points. The Shanghai fell 16. The Hang Seng fell 143. And in the European markets at the close, FTSE up 14. The DAX up 95. The CAC up 31. So with that, I've got to go let the air conditioning guy in. Michael, are you here?
I am here.
Okay, go ahead and take it away.
Okay, I got it. Here we go.
All right, and I'll do my best to be back once I let him in and he goes to work. I should be here when you finish.
Okay. All right. I'll take my time. Here we go. Good afternoon, everyone. Today is Monday, the 3rd day of October, 2022. All right. So if you've not taken a free trial with us and you want to, go here to mytradingiq.com. On this page, all you have to do is click right here, grab a seat here for 5 days of trading and training. Click on that. And you'll be brought to a form. All you have to give us is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor 101 training just for you. All right. Actually, you click on that, you're going to be brought to a sign-up sheet for the room itself. But either way, we're going to get your name and phone number, and you can tell us the biggest trading challenge so we can tailor 101 training just for you. If you're going to take the trial, you got to go here to platforms and download whatever platform you're using so that we can get you set up on your desktop. All right. I think if you don't get the platform on your desktop, then you're not going to get the most out of the trial. I know you're not going to get the most out of the trial. All right. Get the platform and overcome whatever you need to overcome with the platform during the trial. All right, you should also look at the trade handout. It's got all the rules for the trade setups. Pretty simple stuff. Red off a red, blue off a blue. That's all you really need to know. The other stuff you can do, but you don't have to do. The red off a red and the blue off a blue is enough to get you the goal for the day, pretty much every single day. All right, you can go to the videos and watch right here, me putting that stuff into action live in real time. That's recordings of live in real time. It's not actually live in real time. Live in real time is when you do the room. All right. So today is the 1st day of October. So we have a brand new month, and it worked out to be a pretty good month so far. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 3rd day of October. We made 40 ticks in crude, 25 ticks in gold, and 44 ticks on the ES. Put us up $1,200 on the morning session. Today, it took 5 minutes and 1 trade to get to the goal for the day at that point, $125 a contract, and it took a total of 30 trades. So on the month now, we're up $1,200 a contract. That's 1 trading day, so we're still up $1,200 a contract, averaging. We've gone 186 out of 186 possible days so far this year, and 247 since our last negative day. Those are business days. All right, so on the year now, we're at $190,481. Over 186 trading days, averaging $1,024 per contract per 2-hour trading day. If you were to quit trading when you got your goal for the day, and you were to add 1 contract per month, you'd now be trading 10 contracts, guys. So that $125 I may get in the goal this morning, it'd be $1,250, and that took me, I said 5 minutes. It was actually less than that. It was about 3 minutes, but it was 5 minutes before I wrote it down. But that's where you would be. Okay, these are the number of round turns it took me to get the goal on the month. All right, so far this month it was 10 round turns to get the goal. Yeah, so that's all that. If you were to quit trading, you would work 30.58 hours on the year and be averaging $4,063 per hour. This morning we're up $1,250 in 5 minutes. So you get it. All right, let's get into the trades. We'll start out with gold. Now, gold was pretty good today. It did stop us out once. I think our first trade was to stop out, right? Yeah, it was. It was right in here. We had all the ribbon was nice and blue, but we need to go with the trend line trade because it was the wrong color. So we did take the trend line trade. I'm not exactly sure why that was the wrong color in there. That should have been blue, I think. Let me check something on this and see. It's not the CFRN. I had done something last week with the psi bar, and okay, the bar type is 1. I had changed the bar type to 2 for a little while last week. I was looking at something, but okay. So anyway, it was yellow. So the MA1 must have turned red underneath the arrow there, and that made it. Made it yellow. It made it white. So we need to use the trend line. We took a trade there. It didn't go 4 ticks into profit. It stopped us out, and then it actually went down through our stop after a little bit. So we really had no trade, no way of winning that trade. We missed one here that would have been a break even. We took one here that ended up working out, but it gave us a break even. And then we missed one there, we missed one there, and we finally got one right there. We picked up 10 ticks on that one. All right. And in here, we picked up another 10 there, I think, right? No, we picked up 14 there. 14. So we went from 0 to plus 14. And then on that one, we picked up another 11. We went from 14 to 25. So we picked up 14 there and 11 there. And that was where we ended it on the morning session. Now, again, I said, if you just do the red off red and the blue off of blue, you should be doing okay. It was a red off red right here. That would have gotten your goal for the day pretty easily right there. All right, there weren't any more red off of reds or blue off of blue during the break. There was one blue off of blue right here that could have gotten you the goal. There was one right here that I took and got a break even. There was one right here that I missed. There was one right here that gave about 6 ticks. Those are all the blue off of blues. There weren't any more red off reds. I guess there was one right in here, a red off of red right here. That went about 6 or 8 ticks. It would have been a break even for me though. But again, just to illustrate, if you just do the red off of red and blue off of blue, you'll do all right. All right, so crude oil. Now we started out kind of rough on crude. After we got our goal for the day for the first trade on the ES, then we stopped out on gold and we stopped out on crude. Look, we stopped out twice in crude. This first one stopped us out to the tick, and then it went up enough to get the stop to break even, I think. But we stopped out on that one. The next one, we just totally stopped out on. There were 2 stop outs in a row in opposite directions. It just means you're in chop. It happens. I think one of those, I should have had my stop on this one here. I think I should have had my stop at break even, but I didn't. Right up in here, I should have bumped it to break even, but I didn't. So it should have just been 1 stop out, 1 break even trade. Anyway, the next trade in here, we picked up 10 ticks to get us, we're at minus 20 after this. Then we picked up 10 here to get us to minus 10. Missed a trade, missed a trade, missed a trade, missed a trade. Then we picked up 9 ticks to get us to minus 1. Then 18 ticks to get us to plus 17. 5 ticks to get us to plus 22. 10 ticks to get us to 32. Then we had a plus 2, a plus 1, and a plus 5. Okay, so we went from 32 to 34 to 35 to 40. And then we had a break even right there. And I think that's where we ended it on the morning session. Now, again, if we just go through and do the red off of red and blue off of blue, just on crude oil. Okay, here's blue off of blue right in here. Could have gotten the goal. That would have given you about 5 ticks, 5 to 7 ticks. This would have gotten the goal. Let's see, red off of reds. Here's a red off of red right here that I missed. It gave 5 to 10 ticks. Here's another red off of red that I missed. Gave 5 to 10 ticks. This must have, in hindsight, it must have hit the top because I have a circle down here. This was a red off of red right here that I missed. Not seeing any blue off of blues yet. In here, we had blue off of blue. There were 3 of them right in a row. 1, 2, 3. The first one, I took a couple of ticks. The next one, I took 1. And this one, I didn't take any, but I did take 5 up here. But between the 3 of these right here, you had enough to get the goal for the day. Let's see, more red off of red. These right here, I didn't highlight. They were right at the break. It looks like they probably didn't hit. This one probably did, and it would have been enough to get the stop to break even. And that was it. Looks like it might put together another red off of red coming up in here, but it's not showing it yet. Now, one of the things we were looking at here with the crude was after the first run up here, we're looking for the retracement numbers. All right, and it looks like this number right here is what I want to see it retrace to, down to 82.97, I think is what I said this morning. I'm not exactly sure, but the yellow line right there. So it did retrace to that. It's gone through the BBC, and now it could turn around and go all the way down. There is a woo spot over here. Okay, there's a gap there that needs to be filled. I will bring that all the way over here. This is going to happen at some point. Okay, I don't know when, but it is going to happen at some point. All right, so the ES now. We were positive on the ES all morning from the very first trade. Okay, right in here we picked up, I believe, 10 ticks on that very first trade. Right there, you see it ended at 934. And then the next trade we picked up another 12 ticks to get us to 22. And then 4 ticks to get us to 26. Okay, then over here, 8 ticks to get us to 30. This was red off our head right here. We missed that one, had a break even there. Then from 26, we went to 34. From 34, we went to 47. So we had 13 ticks on this trade right here. Then a break even there. And from 47, we stopped out, went down to 37. Break even. Then we went from 37 to 39. So we had a 2-tick trade there. Then from 39 to 51. So we had a 12-tick trade there. Then from 51, we stopped out, went down to 41, pretty much to the tick. Break even there. Then I believe we had from 41, we went to 53. So we had 12-tick trade right there. And that may have been where we ended it for the morning session. Yeah, it looks like it is. But if we go back and just do the red off of red and blue off of blue, we had in here no red off of red, no blue off of blue yet. Here's a red off of red that we took. Here's a blue off of blue that I missed. But so you can see once again that if you just do the red off of red and the blue off of blue, you will do all right. You get your goal for the day. Here's a blue off of blue, another blue off of blue, another blue off of blue. All of them were profitable. Here was a red off of red that I stopped out on. Okay, so finally I had to stop out on one of the red off of reds and blue off of blues. Blue off of blue here that worked out fine. That wasn't actually blue off of blue. That was a trend line trade. Red off of red right here. That would have worked out fine if I had taken it. See, that wasn't an actual red off of red. In hindsight, it pulled the bar down, the line down into it. This looks like it was a blue off of blue that would have gotten a break even. And let's see, during the break, blue off of blue right here, break even. And that was it. So we ended with plus 53. I think I got to update that in the spreadsheet. Ended with plus 53 on the ES. I think I wrote down the wrong thing. Did I? I believe I did. Yes, I did. This was a 53. All right. So anyway, back to the spreadsheet. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. today is the 3rd day of October 2022. We made 40 ticks in crude, 25 ticks in gold, and 53 ticks on the ES. That put us at 13.12.5 on the morning session. Today it took 5 minutes and 1 trade to get to the goal for the day. We're up 10 ticks, or $125 a contract, and we took a total of 30 trades this morning. Okay, so on the month, that puts us at $1,312. That's over 1 trading day, averaging $1,312 per trading day so far this month. We've gone 186 out of 186 days of getting our goal this year, and we've gone for 247 consecutive days of getting the goal, of being positive, not being negative. 247 non-negative days, right? That's over a year since our last negative day. We had a pretty close one last month. Anyway, on the year now, that puts us at $190,593. That's over 186 business days, averaging $1,024 per contract per 2-hour business day. If you were to quit trading when you got your goal for the day, and you were to add 1 contract per month, you would have had to work a total of 30.58 hours so far this year, and you would have averaged $4,063 per hour on the year. Okay, $4,063 per hour on the year. All right, now I'll tell you how to take the free trial. I don't know if Dwayne's back yet, but I'm going to tell you how to take the free trial. You go here to my trading. Okay, you go here to mytradingiq.com, and right here it says grab a seat for 5 days of trading and training. Do that, and you'll be signing up to get into a webinar that goes from 9:30 to 11:30 every morning, every business morning. 5 consecutive days of that webinar is what you're going to be signing up for. Okay, now there may be a weekend in between, but you just fill out this form here, give us this information, and we'll be able to help you out. All right. When you do sign up for the trial, you should download the platform. You should look at the handout, maybe download it, print it out, stick it on a wall or something. Watch the videos so be ready for the trial. Okay, that's what you should do. If you're going to bother taking the trial, go through that. All right, you get a lot more out of it. All right. And with that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, he ready. Excellent.
Recap of the recap.
Today it took 5 minutes and 1 trade to get to $125 per contract.
Good job.
Thank you.
Okay, guys. My AC guy's here. He's working. But we're going to still have to make this pretty quick. We're in week 218 of Logic 247. That's our 24/7 around-the-clock E-mini alert service, which includes crude, gold, silver, and the euro. When the markets opened last night at 6 p.m. Eastern, we put the CTAs out first, and then I put out the Logic 247s. We issued a total of 10 alerts. We had 10 actionable alerts, of which 1 or 10% would have been stopped out based on not risking more than $300 per contract per trade, less when possible, based on market structure and a very simple 3-step process that we teach all of our passport holders. We had a hedge short on the 6E. We had a long stop out on the 6E. We had a long on silver. We had a hedge short on gold. And we had a long on gold. Both of those found their target. Crude oil, long. NQ, short. Russell, short. Dow, short. ES, short. And we're in week 218. Last week, week 217, we had a total of 85 alerts. 13 never triggered. We had 72 actionable alerts, of which 8 or 11% would have been stopped out based on that $300 maximum risk profile that I just explained. Now, The concierge trade alerts are different than the Logic 247 alerts. They were our original alert service. Whereas Logic 247 is based on current price action, the CTAs are based on historic price action. When historic price action meets current price action, that's where you'll find some of your best high probability, low risk trade opportunities. As opposed to coming out around the clock, these are posted as a static report shortly after the Globex open, Sunday through Thursday. Globex opened at 6 p.m. Eastern. This was posted at 6:15 p.m. Eastern. Each market has two numbers. Whatever markets you trade, you should make a note of where price is at the time the report is posted. And then go to the markets that you trade. We'll use the ES as an example. Draw a line in the sand at 36.38. Draw a line in the sand at 35.87. From wherever price was at the time the report was posted. If price starts trending up towards 36.38, that's bullish. So our strategy will look for opportunities to be long the market. On the other hand, if price starts trending down towards 35.87, that's bearish. So our strategy will look for opportunities to be short the market. In either case, that's where you'll use Logic 247 and everything you learn in the live training room every day by asking lots of questions in the live training room. To yourself, find opportunities to be long or short the market. It really doesn't get much simpler. Trading is not easy, but it can be simple. So let's go to the daily chart. We always start with the daily chart because that gives us the big picture view of what the markets are trying to do. And right now, as I posted this chart this morning in the discussion group, we're at potential resistance right at the step line. Now, I also mentioned last week that the step line had crossed. Okay, we had a big down day Friday, but the step line had crossed, and so I said anticipate a rally. $35.71.75 is the exact swing low, the new low. We've been in a downtrend, as you know, since March 29th. Market attempted to break that downtrend on August 16th and failed. So we've had a leg and a retracement and a leg. From resistance to support to resistance to support. Now that's the broad picture, the big picture look. And you say, well, I don't trade the daily chart. Okay, neither do I. However, I look at the daily chart to know which way the wind's blowing. Institutional traders move price. Hedge funds, the Goldman Sachs of the world, etc. They look at daily, weekly, and monthly charts the way you and I look at 30-minute, 5-minute, tick charts, and range charts. So you don't have to spend a whole lot of time studying the daily chart because all of this you studied each day for a couple minutes as it happened. So this is showing you the bigger picture. And we've now had to move this lower reverse fib line. It's a reverse fib line because we're in a downtrend. In an uptrend, you draw your fibs from the low to the high. But in a downtrend, you draw your fibs from the high to the low. Now this is the third time in the past week that we've had to drop this lower line. And based on how we close today, if price can overcome the high of today, the high of Friday, the high of Thursday, the high of Wednesday, then we will most likely go to the 24% reverse fib and the BBC. Pull back to the BBC holds more often than it doesn't. So now that you've got this high altitude look at where the markets are, big picture, then you just simply go to the roadmap chart, the 30-minute chart, to look for your opportunities to be long or short, and then you use your smaller time frame, whatever you've chosen, 7-tick range, 8-tick range, 5-minute. Somebody told me the other day they really enjoyed using the 1597 tick, or you can use the 610 tick. It's whatever you get comfortable with. There are no magic time frames, I promise you. So we opened last night. Okay. Market opened here. Market opened here. We filled the gap. We came back down. And we ended up closing here. And then we got a leg. These are last week's zones because on Sunday night, all the alerts that go out are based on the previous week's zones because the new zones don't come out until Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. So we have over a decade of data that tells us how price behaves around a weekly trading zone. Only 3 things happen at a weekly trading zone. When price rallies up to a zone, we expect it to be resistance. And it was, and it was, and it was, and it was, and it was. And then we broke through. But the market wasn't quite done. Now we had blue and climbing. But what we need is we need to see an open and a close above the BBC, which we got here. We actually had an open and a close right there. However, this high led to a lower high, and so it failed, came almost back down to the CTA number, and it got back above last week's zone, got above blue and climbing, and took off. As I said, the pullback to the BBC holds more often than it doesn't. That's what that looks like. Okay, this was a huge red candle all the way down to the BBC. It's almost like an obsessive compulsive thing, like you just had to touch it, and it did. And it took off like a rocket. Back here, we only had one trigger on the short side. From 35.87, we traded all the way down to 35.72. So that's 15 points at $50 a point. That's what the market made available. Alexa, 15 times 50. Hey Alexa, 15 times 50. So $750 per contract traded. You've earned the right to trade 10 contracts. That's $7,500. Okay. Over an hour and a half. These are 30-minute candles. So, price fails to put in a lower low, gets back above the BBC and begins the climb. This was the last spot the market ran into resistance on Friday. As we headed down, actually it was here. It was the last resistance spot on Friday. And if you look at the horizontal line on the cursor, here, 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 here. Okay, so we get above the BBC, we make a run, the CTA long number, knowing that that daily step line is overhead and is potential resistance. We're right at it right now. Okay. Notice the word potential. Could buyers show that they're so committed all of a sudden in the absence of any good news that they want to buy the market? Is this that attractive a price? Well, I'm not ready to sign off on that yet. So we get to the ES. Remember, once an alert triggers, there's a greater probability of it triggering multiple times than not. 36.38 took us up to 36.4175. So that's 3 3/4 points. Price gets back below the trigger. Off we go again. And from 36.38 we go to 36.45. That's 7 points at $50 a point. Then we get back below the trigger and off we go again, up to 36.41. That's 3 points, $50 a point. And then back below the trigger. And the high is 36.80. So that's 42 points at $50 a point. That's over $2,000 per contract traded. Now the trade to target on every long alert is the zone above. On every short alert, it's the zone below. Okay? Does it always make it? No. But it always tries. We had another one way down at 34.13 last week. Okay? Again, these are last week's zones. On tomorrow's broadcast, the current weekly zones will be on the chart, because any alerts that go out today will be based on this week's weekly trading zones. But you can see how price respected last week's zone last night. Okay, we had wide-ranging consolidation all around 3602/3603, which we hit on Friday. And then in the discussion group, I said, guys, looks like we're going to have one more push to the downside. And we did. This candle right here, this red candle. Okay. And that was derived from looking at the 30-minute chart, the window of opportunity, and the 8-tick range. So from 38 to 57, that's 19 points at $50 a point. We've got a high, we've got a lower high, we've got a lower high. Okay? Suddenly everybody's obsessed with drawing trend lines. Well, there you go. You connect a swing high to the most recent swing high. It's really pretty simple. Bert's going to make you guys a new video. Okay, on the Dow. 28,700 was the short CTA number, and we dropped to 28,635. Hey Alexa, 87 minus 35.
87 minus 35 is 52.
Alexa, 52 times 5.
52 times 5 is 260.
So that's a $260 per contract move. Then price goes back to last week's zone. Resistance, 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 resistance. We break through only to come right back to it. It's like a magnet. Then we get above it. The step line gets on the left side of blue and climbing. Oh my goodness, there's so much room to get your goal before we ever get to this number. Okay? From 29,110, we made it to 29,141. It's 31 points, $5 a point. Back below the trigger, and up we go to 29,178. That's 68 points, $5 a point. And then back below the trigger and up to the target at 29,300. That's 290 points at $5 a point, $1,500 per contract traded. And then we continued higher. A high, a lower high, a lower high, and so far a lower high. Again, these are last week's zones. When price slices through a zone like it's not even there, what will typically happen is it will retrace back to the zone it sliced through and continue in the direction of the slice. But again, these are last week's zones. On the Russell, Short CTA was 1661. The target was 1659, 2 points. Did it once, did it twice. Then we get the bullish cross. We make a run, get to 1697, and we get 2 ticks short of 2 points, then back below the trigger, and from 1697 we run up to 1715. So that's 18 points at $50 a point. Looking left, we would expect resistance. This bearish cross, the first time price returned to the area, it served as good resistance. It almost always will. All you got to do is look left. If you learn to look left, trading will suddenly seem much simpler. So we could grab this, and if we wanted, we could just drag it on over. Okay. The bearish cross created this swing high, and this swing high created this swing high. Once the market defines resistance, it will remain resistance until broken. Once support is defined, it will remain support until broken. On the NQ, here's where we opened. The vertical line, by the way, I don't think I said it, separates today, Sunday, Monday, from Friday. There's Thursday, and so on. This was the window we drew on the show Friday for the NQ. It filled once, it filled twice, it filled 3 times. On the long side, 11,200. The target was 11,226. So that's 26 points at $20 a point. Alexa, 26 times 20. 52.
Times 20 is 520.
Yeah, $520 per contract traded. Then price gets back below the trigger and does it again. And then price gets back below the trigger and does it again. And then price gets back below the trigger, and now it's attempting to do it again. Crude oil. I drew this price channel back on Friday on the broadcast. Every broadcast is archived, so you can always go to the YouTube channel if you missed it. We connected this swing high to this swing high to this swing high. And then we made a copy of this trend line, the exact angle, by highlighting it, going Control C, and then going Control V, which gives us another trend line at the exact angle. Got to grab it in the middle so you don't shift the angle. And we drag it right down here. Price poked out of it one time, but when the 30-minute candle closed, it was way back above it. And so then as we went into the close on Friday, that trend line held. And this was drawn on the show on Friday, so if you were trading crude short, you should have known that there was a potential for the market to find support there, because I showed it to you on the afternoon broadcast before it happened. Okay, so crude had a huge gap open, ran to the top of the channel, backed off, ran to the top of the channel again, backed off, made another run, finally made it through the channel. Okay, broke out of the price channel. That should put you on high alert for a move to the upside. Okay, 83.10 up to 83.22, $120 per contract traded. Back below the trigger. This time $150 per contract traded. Back below the trigger. This time, $220 per contract traded. Back below the trigger. $150 per contract traded. Back below the trigger. And then we run all the way up to 84.56. From 83.10 to 84.10. That's $1,000 per contract traded. $83.10 to $84.10. $1,000 per contract traded. And from 84.10 to 84.50, that's $400. So this last trigger was a $1,400 per contract move. Now price has gotten below the BBC, got red and falling overhead. Window of opportunity. 82.45 down to 82.25. That's a $200 per contract window of opportunity. As price approaches the top of the window, you go to the smaller time frame that you use to execute your trades with. You look for a pullback to the BBC, a down close. Then you take advantage of the window. Once price enters the window, does it have to stop here? No. It can break this support. Buyers have established they found this price attractive on this big move down, and they drove it back up to the BBC. But we got red and falling overhead. And on the 30-minute chart, that's very meaningful. Okay, doesn't mean price can't go up here, hit red and falling, and then fail. Or it could even overcome red and falling. However, if the market drops, there's a nice window of opportunity. Should buyers truly be committed to the long side, there's a window of opportunity there. From 83.50 up to 83.90. That's $400 per contract traded. So whichever way crude decides to move, if it does anything other than just go sideways, you'll either have an opportunity here or an opportunity here. When I draw windows, I always make them conservative. Okay, I didn't put it like right on top of red and falling, because we know that sometimes price will spike areas of support or resistance. Just like here, price spiked the BBC, it spiked it again, it spiked it again, it spiked it again, but it's still printing a red candle. So the highest probability move is to the downside. And you know this simply by looking at the chart. Okay, gold. We had a drop here to a whopping 1666.50, $50. Okay. This is where we opened. We consolidated at the BBC and the weekly zone, last week's zone, for quite a while, several hours. Then we got a move from 1676 up to 77.8. $180 per contract traded. Then we get back below. We make another run to $80. We get back below. That's where we did this little aberration to the downside. Then up we go again. This time to 77.8. That's $180 per contract traded. Back below the trigger. Up to 1683. That's $700 per contract traded. And the resistance You anticipate. But the market backs up, gets below the trigger, takes off again. All the way to the target. From 76 to 96. That would be, it's $2,100 per contract traded. From the CTA long number to the target, which is on a short, the zone overhead, on a long, the zone overhead, and on a short, the zone below. Doesn't always make it to the zone below. Doesn't always make it to the zone above, but it did. And now price is consolidating where? At last week's weekly trading zone. The previous weekly zones will typically hold sway over the market till sometimes Monday and sometimes even into Tuesday. And sometimes there'll be important zones that carry through the whole new week. So you don't want to throw out the old zones on Monday morning when you apply the new zones. Keep them on a notepad. I mean, you can leave them on your chart, but then you got an awful confusing, crowded chart. And simple is better. The less stuff you put on the chart so that you can actually see price. Now this huge move up, what do we got? We got the step line, blue and climbing. First we have price, then the step line, then blue and climbing, running in parallel. What's changed? Look at the step line. It's starting to hook over. If the step line gets on the right side of blue and climbing, it was on the left side all the way up, but if it gets on the right side, anticipate a pullback to the VVC. Silver. No trigger on the short side. From 1917, we ran up to 1926. That's 9 pennies, $450 per contract traded. Then we got back below the trigger and ran all the way to the target. Alexa, 45 minus 17.
45 minus 17 is 28.
28, so that's $1,400 per contract traded. Every 2 pennies of movement in silver is $100. From the entry to the target, $1,400. Once an alert triggers, it will almost always trigger again. All right, I gotta go see my AC guy, so let me show you the euro real quick, where nothing much happened. From 810 to 985, it's 185 ticks. 80 ticks is $100. 100 ticks is $125 per contract traded. So prices now pull back to the VVC in the zone. If it can overcome the step line and overcome that swing high, we'll trigger again. We had several short triggers from 235 down to 98065. That's over $125 per contract traded. Once, twice, 3, 4. And this one went to 115. That's over $125 per contract traded. So there you have it. So I had to go see the AC guy and see what the damage is. Sorry, won't get to the good word today, but I got to go take care of him. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.